Greetings, everybody. It's Jeff Scott, and this is my weekend review for the week of ending 3/4/2018. It's still Saturday night, but I suspect you won't be seeing this till Sunday anyways. Last week, I talked about how there were great setups as the market, and the market being a basket of stocks, many stocks were setting up at the 50-day moving averages. It looked like it wanted to go higher, but I cautioned that perhaps Fed Governor Powell might scare the market. And he did. He used words like overheating. A lot of people started pegging higher interest rates, more raises than expected. And we had a huge increase in volatility and swings in the market. And despite Monday and Friday being pretty great days for the bulls, the market was a down week. The S&P down about 2%. Now what's going to happen? It's funny, the way I like to do my videos is I like to do them without any outside influence. So I do my videos and then I download some interesting things from a number of different sources, and I watch them usually tomorrow after I did my video tonight because I don't want to be colored in my thoughts. And as I did my video last week and then I listened to others, there was just a lot of bullish sentiment in what I listened to. And unfortunately, the Fed sort of took that away. So I entitled today, If at First You Don't Succeed, because if you look at something like the NASDAQ, it's setting up the same way again. Now, we have other things that threw wrenches. Tariffs. Trump is now threatening to raise tariffs on imported cars if people respond to his steel tariffs, especially the EU. So I don't think this is the 1920s where tariffs were perhaps blamed for part of the Great Depression. We have low interest rate environment, we have low inflation, we have good economic growth, we've got strong employment. It doesn't feel like a depression or a recession. So maybe this week we can get over the news and the wall of worry. So let's see what happens. But clearly volatility is much increased compared to where it was a few short months ago. As always, this is for education purposes only. I'm a doctor, not a broker. I have no licenses which would allow me to tell you what to buy. So anything that I talk about is purely in the educational basis. I do take a lot of the trades I mentioned because then I can go back and look at them. But again, all this is for education. I buy the tools that I use. And clearly, as every person who talks to tell you, trading involves risks, and you alone are solely responsible for any decisions you make. When I do my live education, I like to call it Be Your Own Guru, because I learned it from this guy here, Ian Woodward. And Ian would say in an accent that I could never reproduce, "Jeffrey, I'm not a guru. I teach you to be your own guru." And frankly, I think that's what everyone's mission should be, is don't rely on what somebody teaches you or only what one person tells you. Get a number of different influences, read books, go to seminars, and then become your own trader. So I've taken the best of Cancelim, Improved by Morales and Catcher, Woodward and Brown. I've got some great peer influences, George Lee from Western Canada, Van Tharp, Position Size and Money Management. And what really changed my results and made me from a good trader, who actually was a good trader, made a lot of money, was John Person and knowing how to not just manage it from a book, but manage trades in real life and when to take the trade, when to get out, position size. And he's got some great indicators which are really instrumental in helping me not only understand the market, but to take the trades. And I've had the pleasure of sharing the podium with both John and with George Lee in various educational endeavors. Highly recommend both. Now, quick advertisement. In April, and let me pull my iPhone so I give you the right dates. I mentioned this last week. I had tepid interest, and we'll see how many people come out from this week. And I'll probably put something in the note that I paste on the board. On April 6th, which is the first Friday of April, I am considering doing a one-day event in Southern California. I will probably be joined by TG Watkins, who does some really cool things with MACD and both short and intermediate term trading. And I would envision it being an 8 to 5 program somewhere in southern part of LA County or Orange County. I need to have at least 10 people say they will commit for me to put this on. If you're interested, please drop me an email. Those that sent me one from last week, you don't need to repeat it. And then in the next week or so, I'll decide whether to do this or not. The reason why I'll be in Southern California is that I'm hoping that there's a George Lee Summit on the 7th, 8th, and 9th. I've committed to speak there as long as they have it. And since I was going to be there anyways for work on Thursday, I thought I'd stay Friday, do a one-day program, and then be there for George Lee's meeting. So please drop me a line, hgsidoc@gmail.com, if you think you might want to attend. Price point, probably in the neighborhood of $500. It'll include breakfast and lunch, and then recordings of everything we do. Since it's being done outside my home area, it will not be offered as a online, unlike my last December one. I have a lot of software. I need TradeStation or Thinkorswim. Genesis is great, but it's probably, I'd consider it a luxury, consider I have to pay for it. HGSI and EdgeRater are my analytic programs. I do seasonality with the major programs, and then some of my favorite websites. Here's HGSI's website. I am independent, unaffiliated, despite the similarities in email address. Key points, free 30-day trial with no deposit required. And then under investing strategies, you can find a number of movies that I've done. Now, I always have to understand, in my mind, what the market is doing, and that will influence what I decide to do with my individual holdings. And to me, this is a critical question. And where are we? Are we rolling over? Are we about to take another leg up? Because how I position myself is very dependent upon what I think we're doing. What we've been for years now is every time it looks like we're having a significant drawdown, and for all the bears out there, we've now had our 10 and 12% corrections, but every time it looks like we're pulling back, we take another leg up. Is it going to be different this time? Now, I do a lot of different things I don't talk about on these webinars, but my longer and intermediate signals still don't show me the market rolling over. So it wouldn't shock me for a retest of the recent lows. It wouldn't shock me for the volatility to go on another 1 to 3 months. But none of that would mean that the bull market that we've been in, that I've been fairly positive on, is necessarily changing. Friday was a bullish market. This is just what I call my sector review. Probably hard for you to see. If I could do this in 4K on the video, you'd see it very well. But I look at home builders, and I see mixed red and green. This is not just the builders, but the remodelers. I look at materials, which had been strong, clearly more red than green. I look at the XLE, more green than red, XOP, so services, production, and OIH services, production XOP. It clearly looks like energy perked up. Rising rates, good for finances, and clearly XLF and KRE type stocks showing some strength. Next one down here is insurers. They like high interest rates as well. Broker dealers, credit cards look strong. The industrials were mixed. Technology, almost everything was up on Friday. All right. This here is semiconductors, consumer staples, discretionary, retail mixed. I had position in Gap, and might be time to fall into the Gap again. Utilities were weak on Friday because the market was so strong. Healthcare was okay on the XLV and DRG, but biotech seemed to have a great day. And if you look at the returns on biotech, 7%, 2%, 2, 3, 3, 2, 1, 5. I wonder if biotech's about to make a run. I have LABU, which I talk about often, and it had a nice day on Friday. Transport's weak, gold weak. ITB, builders themselves, have pulled back to major support. I hope to show you Toll Brothers and Pulte as an example. REITs shouldn't like higher rates. Casinos had some Macau questions about revenue, social media, and then some foreign markets. So I have this running all day long, and I love it because I can take a quick look at my screens and see where the green is, technology, what's not working, utilities, and it really helps me intraday to understand what the market's doing. And one thing that John Person showed me one day was if you start to see big moves like I showed you in biotech, institutions are moving back into there. So maybe biotech's going to show some strength. Now let's just jump into Thinkorswim itself and look at the major markets. Let's make this one at a time. And let's see. Come on. So here's the E-minis. Low on the graph is 24.45. 378 points up on the E-mini since September, peaking at 28.78. And we're kind of living in the middle at 26.90. So we're 245 from here and a little bit under 200 from there. So we're a little bit above the midline. So I looked at the E-minis. This was the horrible pullback. Go back and look at my predictions. We kind of hit it within a quarter of where I thought the low would be on my low road scenario. And then I talked about probably bouncing around the 50 for a while. That's what we're doing. Eventually it'll break above that or it'll break down and retest. I look at this, I see a neutral picture in my mind, but a bullish close on Friday. If I look at the NASDAQ, to me it's a little bit stronger looking. And why? Because it's above the 50 and the 17th. It's got this top or bottoming tail here with a long tail underneath. To me that looks, I would want to think more bullish than bearish, although keeping in mind that's a PPS sell signal on Thursday. But again, the same picture. Are we going to retest? Are we going to bounce around this area? Are we going to break out to new highs? I like the fact that it's above the major moving averages. If I look at the Dow futures, looks a lot like the S&P, also in a sell signal. And again, is sort of consolidating under those moving averages. The Russell, perhaps until Friday, the weakest of the group, sort of in a range between the 50 and the 200-day moving average. This is a high close doji, and we are going into a seasonally strong period of time for small stocks. So maybe we're going to see the Russell trade higher. The VIX, it's interesting because although it certainly has come down from its 33.35 high, and it had a topping tail on Friday with the strength in the market, we're living in the 18 to 20 range, which is a lot different than the 10 to 12 range. So we certainly have set at a higher level of baseline volatility, although it has come way off its highs. And then the dollar struggling to get above its 50-day moving average, which I think will be supportive for the market, especially small stocks. So when I look at the markets, at least on the daily, and especially the NASDAQ, I see some potential strength. When I look at the closes on the E-mini, even the YM, although it was down on the day, and the Russell, I also see something that looks constructive, at least for the next couple of days. I have to balance that, of course, with some pretty awful, here's the Russell, here's the Dow, awful tariff stories over the weekend. So you never know with the news. So everything I say is pending looking at what futures are. And the weekly charts, we're still in uptrends in all the major indexes. We are in sell signals on the E-mini, on the YM, I believe also on the, let's see, the Russell, did it switch? Russell's still, I believe, in a sell signal. And then the dollar, DXY, and then let me change something here, go up here, and we're going to save grid as new weekly IWM indices. All right, flip this, and you can see the dollar just struggling here, and that's probably a saving grace for the markets. So despite the bearishness, the bearish tone in the marketplace, we're still in a long-term uptrend, and that matters. All right, so let me back my dailies, hopefully. All right, go back to my PowerPoint. Again, for folks that are new to me, I spend a lot of time looking at the market because I've learned over the years, and I think I'm a pretty good top-down guy and stock picker. If the market's fallen like a knife, I suck at picking long stocks, and so does everybody else. The market's what matters. So it really, to me, matters to know what the market's doing before I start worrying about what I'm buying or selling. And then this is just a picture from my Genesis screen. And what's cool here, I have 3 rows. I got daily, weekly, and monthly. And I have columns of E-minis, the NASDAQ futures, the Russell futures, the NYSE, and the Dow futures. Looking at the monthlies, you can see how strong and in buy signals throughout. On weeklies, we're in a pullback, and it's a lot, obviously, more choppy on the dailies. But it gives you a chance to look at single views. You've got advanced decline, OBVs. You've got seasonality on some of the charts. It just gives me a sense of understanding what the markets are currently doing. I also like to look at certain things underneath the markets. We've been talking about rates going higher. So I put these lines in a long time ago. And the point of these lines was the bottom vertical line on the 10-year Treasury yield. That was the 2.5% interest rates on the 10-year. And the higher one here is 3%. And the reason why they've been there, and if you go back and look at something 2 years ago they were there, is because I figured that as long as we were below the 2.5%, that told me people thought the economy was weak. And that if we could get to the 2.5 to 3 range, that would be supportive of a rising market. And if we get above the 3% is when people start to get giddy now and get worried and start selling. I've heard some people say maybe it's 4%. Bottom line is both 10-year and 30-year rates are on the rise. That means certain things to your portfolio. Rising rates are good for banks, especially regionals and insurers. It's bad for things that are bond surrogates. So TLT, we'll talk about that later, REITs, MLPs, utilities, dividend payers, and then home builders. You might expect these all to show weakness with rates going up. Now the AD lines in white with the S&P 500 in yellow on both the medium, the Russell 2000 stocks and the larger 1000 have all rolled over modestly. If you look at the NYSE AD line, then a basket of market ETFs, you have, for example, green are the diamonds, light blue are the Qs, yellow are the spiders, the orangish red is the IWM, transports are the darker red, and you can see they've all pretty much tracked up with the AD line. Where the divergence has occurred has been TLT selling off as the market has gone higher and bonds continue to be weak with the rising rates. I look at a number of breadth indicators, and I'm really looking for extremes. I'm looking for extremes, overbought, oversold. So you might look at a number of stocks above the 200 or above the 40-day. And the green dot shows you where you are right now. And we're clearly below the middle range. So if anything, breadth is weakening, but it's not to the extreme. When I talk about the extreme, this is a 3-month or 12-week new high, new low. We knew a couple weeks ago, I knew that the market was going to bounce because we were dropping all the way down to this lower range here, where every time I get into this area, and if I look at daily charts, you'll find we hit the bottom, we see a jump in the marketplace. So we're in the lower part of the chart here with the green, clearly weakening breadth, but not to an extreme that says the market has to go one way or the other. I look at the McClellan, I look for zero-line rejects, I look for divergences, I look for big moves on the summation index. And as we got near the lowest, you can see every time we peaked at the bottom is about the time the market turns around and goes higher. I don't see a whole lot here to make me happy or sad. And here's the weekly as well. Then I look at some things that we do in Edge Rater, which are taking off certain Ian things. Imagine if you could take the entire S&P 1500 when it says 1/1/2018. I redo the list of stocks every quarter, so I'll be doing that sometime in the next couple of weeks. And then, so that's the date that I redid the list. This is the date I ran it, which would have been Friday's close. And I take the 1,500 stocks in the S&P 1500, and I see how many are above or below their Bollinger Band. Well, we're right neutral. And then I look at the lower 10%, next 10%, and so on and so forth, with 10% below and 10% above, to get a sense of where the stocks are. And it's very symmetrical right around the middle. That is absolutely no signal. This is what a buy signal looks like. 55% of the stocks, approaching 60%, are below their lower Bollinger Band, and 95% of the stocks were below the bin line. That was the picture on February 8th, and I bet if I go look at charts, the market started to rebound at that point. Here is when it's going to reverse the other way. January 12th, 76% of the stocks were above, and we're about 23% above the upper band. So the buckets give me a sense, are we closer to a bounce, a pullback, or neutral? And we are neutral right now. I look for Hindis. Hindis occur during periods of, I guess scientifically use the word of entropy, of confusion, of molecules bouncing around, confused of what to do. They signify the weak hands buying and the strong hands selling. So we're buying and the professionals are selling to us, and then the market rolls over. We had Hindis in January, and the market rolled over. Okay, this is a very rolled over market. So these were accurate Hindis. About 1 out of 4 Hindis are accurate. Most Hindis have a modest or very small correction. So Hindis are a number of factors, and I just look down here. I see there's red here that tells me 3 of the 4 factors are being met. But it takes 4 to trigger a Hindi, and there are no Hindis on either the NASDAQ or the NYSE. Market tone, we've gone from a very bullish tone to a mixed tone. Not surprising with the craziness in the market the last week, Tuesday, Wednesday, and Thursday, but it's not red. And if I look at sectors, sector strength actually weakened a little bit. Let me change my slide. A bit. But you'll notice on the sectors, and let me do a little teaching point here, still no red. This here, the percent B times bandwidth is the Woody indicator, and green is a buy, red is a sell, yellow is neutral, and you can see we've gone to mostly a neutral stance on the sectors. Then another thing that Woody taught us, Woody being Ian Woodward, was to build your own indexes to give you a sense of what the market's doing. So I'm going to show you 3 of them. This one's an ancient one that Ian himself created probably in 2013-ish. And this is the canaries in the coal mine. And these have been giants. Boy, is Netflix a giant again. And Priceline changed their name. I have to update that. But these have been giants in the market for some time. And what happened? Here's an index of these stocks. And even though they sold off hard this week, look at what happened Friday. Bounced off the 17, very bullish looking day. I think uptrend is still intact, and will go on to higher highs, pending news flow. How about an index of leaders from June 27th that I put together? Pull back to the 50 and had a reversal day. Looks like it's going higher. And what about my melt-up leaders, which we pulled 2 weeks before the market, or 10 days before the market died? Leaders at the time. Similar, pull back hard to the 50. Is it getting ready to run again? Be interesting to see. Know your news and your earnings. Last week we had Powell speak. So what I would expect this week, just be cynic about it all. And we're down a bunch of Fed governors. But I bet you hear people coming in and trying to soften the comments that were perceived from Powell. And I bet they're going to try and talk up the market. I think that the news around tariffs and the EU may shake up the market, and that's probably a risk that we'll have to wait and see. Here's the big news events that are coming out. Rates on these auctions will matter. The employment for March 9th will matter. We didn't get employment numbers on Friday because it was the first of the month or the second day of the month. So we should learn employment numbers, what John calls the monthly unemployment report, on Friday morning. There are still some big earnings to come. Target, Ross Stores. I think YY is out. It certainly had a big move like it's out. Dollar stores, auto, home. So we're not done with earnings yet, is the point. Market thoughts. I think we ended the week poised to go higher. However, we saw a similar pattern a week ago and we failed. Last week started ended strong, kind of like the reverse Oreo, hard in the middle and soft on the outside, instead of soft in the middle and hard on the outside. Ended strong, but as discussed on last week's webinar, Powell's Fed testimony and comments of overheating led to marked increase of volatility midweek with commensurate sell-offs. Wall worry persists, but markets like to climb them, and we have to include not just rates, taxes, but we have to add trade wars, the soap opera with Russia, Trump, and the FBI, personal changes in the White House, even the son-in-law got his security clearance reduced, and then now the rising angst against the NRA and related entities after the Parkland shootings. Risk certainly higher this week as broadening trade war concerns are going to spook the market, yet indices of many leading stocks look to me like they want to go higher. Typical top-down agenda, and let's go take a look at the charts. I'm considering a end of November, early December live meeting one day in Florida again, but I'm not going to commit to that. Right now, the only thing I'm committing to, if there's interest, is the meeting on the 6th of April. Let me just go back up to the top. Here's my email address. If I don't get commitments this week, then I'm just not going to push it. I don't do these programs to make money. No one pays me for this video, and I don't do the live sessions to make money. I do them because I enjoy teaching, but it's not worth the hassle if nobody wants to come. No hard feelings either way. All right. Now, I still like TradeStation despite the challenges I've had with the new version. This week, I got the new version to work today, so we'll use that right now. And for those that have been here before know that I look at certain things to get a sense of the market in TradeStation. Let's just very quickly look at them. Let me a couple of things I got to add here. Add blank row, and then do an add TF. All right. So I have what I call my 5 or 6 point test. So I got to make this blue. Hopefully this is the right blue. Let's see. Not the right blue, so let's go down here. All right. So here's the E-minis. First thing I look at is it a person buy or sell? It's in a person sell. Second thing I look at is the color of the bar. Elder calls this the Elder Impulse Indicator. If the bar is red, you can be selling, or you could be holding. You shouldn't be going long in new positions. It's red on daily, weekly. Third thing I look at, where are we at within the bands or the Elder envelope. We got very excited back here. This must be the date. Let's see, what was this date? I think this is the day that the market, 5th, I think that's 6, 7. This is, I think, the 8th when we hit the bottom on that, when I showed you the buckets. When we get way up below the envelope, we expect the market to bounce. We're in the middle there, so that's kind of a benign. I look for these red dots on top or green dots on the bottom, and these give me a sense of some MACD divergence, which you might see that at the end of a run. We don't see any of that. They work themselves off. I look at where am I at in the high jump. We were up here saying that we were at 100% on the high jump and basically saying that the market's going to pull back because you can't stay up at that extended for a long period of time. Now we're at 38%. I look at this, I see a market that's weak. It's not dead. It's not so weak that it's going to bounce, although it did have a strong day on Friday. I look at the NQs. I see a similar pattern, red bars, sell signals, 38%. I also look at my weekly bongos, which on both the E-minis and the NASDAQ, I believe the weekly bongos are still red. So if you want to be bearish, I think you got some pretty good information there. And one of the market wizards I remember seeing, is it Richie or somebody, that if you don't risk some of your gains, you'll never make the big profits. And I've certainly seen that with some of my big winners, is I don't just bail because the market's in a tough spot. I'll trade around my positions like my Bank of America, like my Amazon, and some of my others that have very low cost basis. And whether I'm selling out of the money or at the money calls, buying puts, or a number of things that I do. I wouldn't be opening up a whole lot of long positions until I saw some strength coming into the market, or new longs. The Dow, YMs, they were the weakest indice on Friday. Why does it want to switch? Hold on a second. You know what? I think I screwed up. All right, so the Dow looks like the S&P with sell signals. The NASDAQ, I bet it didn't flip before. Yeah, the NASDAQ actually looks a little stronger, so I'm glad I went back to it. So the NASDAQ did turn blue. So of the three, although they're all in sell signals, they're all in weekly bongos that are red. They've all come off the top on the high jump. The NASDAQ has a blue bar here. When I see a blue bar, that tells me it's neutral. I can be going long. So right now the NASDAQ looks the best. And then lastly, the Russell, which is getting into a seasonally strong period of time, still is in a sell signal. It actually had a green bar. So the indexes, the NASDAQ and the Russell look better to me than the Dow and the S&P. If I want, it's a little bit different pattern here than I've used before, so I have to find things. I may have to put on some of the things I used to do. Let's see. Let me check this here. Data, add blank row. I wonder if at VX will work here in this program. Probably not. So let's go VIX.X. And it's not going to do that, so I have to do a $sign VIX.X. And you can see on Friday, the VIX was down, but if you start looking at all the other things I showed you, it's in a buy signal daily, weekly, and monthly with blue, blue, and green. So the VIX is the strongest. The weekly bond goes green. I just think the VIX has had its run. I think the market goes higher, but there's no question that there's lots of volatility. And my prediction ends in 5 minutes, and I'll wait until I see what the futures are, and I'll trade the market we get, not the one I think we should have. So I come out of this with, although I want to be bullish, the markets still are going through a consolidation period at best. And small stocks and NASDAQ maybe look a little bit better. Just because some people care about the U.S. dollar and they care about gold. This is looking at U.S. dollar futures, and the dollar has picked up on the daily, but you could see how much it's fallen on the weekly, monthly, still in sell signals, so there's a counter trend rally in the dollar. And then if the dollar's been weak, then gold should have picked up and had been strong. And you can see gold has had a big move up here, but gold is weak right now, especially with the dollar moving up. So now I've got a sense of what I think the market's going to do. Let me go into HGSI. Again, this is repetitious, but I do it repetitious on purpose because the way I learn and other people I think learn is from seeing the same story, different programs, same basic look, and frankly, what matters on Monday is what the market does more than anything stock picking that you or I are going to do. So in HGSI, I want to pull up the major market indexes, which is part of the Woodward and Brown user groups. And one of the little tricks in HGSI is if you click on a group and then you hit warehouse view to show up here. And I like using the top-down view, which is price and volume only on these indexes. So it shows me, big shocker, NASDAQ and Russell 2000 were the strongest on Friday. This is heavy on 1 day, a little bit on 5 days, and just a teeny bit at 3 weeks. So I'd use this to tell me what's working now. What's not working, NYSE, the Dow Composite, S&P 500, 100 are down here as well. So small caps and NASDAQ outperforming. Strong day for the NASDAQ 100 as well. Now, if you look at a 5-day performance, the VIX was up 18%, but it was down 12% on Friday. The market had a pretty big reversal. And if you look at some of the indexes, the S&P, as I said, was down about 2%. The NASDAQ was down about 1.1%. Biotech was down less than 1%. It was a tough week last week for the longs. Now, in HGSI, the way I look at the market is I go into, just get this set up. I like to look at a clean chart. So let's look at this one here. So what I have here is I've got my weekly bongo and daily bongo. So it's been in a sell signal ever since the big sell-off. I've got my high jump here, and I've got my Hindenburgs right here using two different tools. So there's no Hindi fired. My high jump has come down. Notice when I got up to the top, what did I do? I rolled over. We are in the middle between the highs and the lows, and my guesstimate has been that we were going to consolidate in this area, which I think we probably still will. This looks like it's going higher on Monday pending news, but I don't know if we're going to break out of this trading range. Not to say we don't retest. And, if you go back far enough in the market, 14. We've done this before, and it takes a while to fully recover. Here's 15. We did almost retest a month and a half later before the bull market recovered. I didn't anticipate when I first started talking about the pullback of V recovery. We don't have a V recovery. We're consolidating. That doesn't mean it's not healthy. So here's the S&P 500. If I look at the Dow Jones Industrials, similar pattern. I've been talking for weeks and months that we're going to revisit the 50-day moving average eventually, and we did. I look at the NASDAQ, which we said was stronger, and you could see it's above its moving averages here. If I look at the Russell 2000, big move up on Friday with a high close doji, and this here is a kahuna on the IWM. That's impressive. That's a big move, and as I said, this is a seasonally strong part of the year for small stocks. Continuing on at the things I like to look at, the dollar, clear-cut downtrend, although it's in a counter-trend rally, weakened some on Friday. It's been a sell signal on the bongo since the end of December. If I look at the VIX had spiked early in the week, and then it came back down. It's right in front of my face. Here it is. And again, as I pointed, it's much higher for resting than it was down here, which I think you can feel that every day in the volatility of the market, the 200 and 300 point differentials during the day. But it's come down off of its higher levels. And then we already looked at gold, but here in HGSI, you can see gold had a nice run, but it's been chopping here, especially with the dollar moving up. Silver, similarly, but at a lower level than gold. And then oil, which has been in a nice run, is it ready to run again? Be interesting to see. All right, so if I haven't told you clear enough, I'll tell you the market is, the market's in short term, it's challenged. I think long term, the market's still strong, and it'll be news driven. If there are no news and no talking heads, I think the market would go up on Monday, but I can't say anything until I see the news, and trade wars are spooking the markets. If I look at how many groups have forced to the upside, I'm looking at very short-term momentum of the 170-some industry groups, 67 to the upside. And despite all the market turbulence, only one group has a short-term force to the downside, Home Product Store Index. And really, even though the index is down, none of the stocks are actually to the downside. That's interesting. There must be some small stocks that didn't make our cuts here. If we look at 5-day down, 51 groups. If I look at 5-day up, 41. So what did I just showed you? I showed you on a short-term basis, most of the things are moving up, but on a longer-term basis, there's a little bit more pressure to the downside. So I then like to, since my premier direction, my higher number directions to the upside, I like to start with the top 10 industry groups. And what I'll do is I'll right-click on biotech and start to look at some of the different names. Now, this is a group that I know a lot about from my day job. Some of what I know is probably protected, so I have to be careful what I say. Puma Biotech, they launched a drug to compete with a drug called Herceptin. It struggled in the market. There's certain things to like, and it's oral, but like I said, it has struggled in the market. Like a lot of biotechs, it had a big run up when it got early on hype and news, did nothing. And then in 2017, as the drug was getting close to approval, it gets approved, and it's never seen those numbers since. If they, oncology drugs, cancer drugs have been hot, and that's where they're at. So they've been sitting here well below the 200-day. They had a big move on Friday. So I'd wonder, mobile breakout from a squeeze, a big move up here. Here's a pocket pivot and a kahuna. Weekly bongo still in a sell signal. So I might right click, more info from web, FinViz, and the magic of programming. It'll open up a web page right to Puma Biotech and FinViz. And let's see if there was news. See, this was a couple days ago when the Europeans voted against approving their breast cancer drug, and their loss was nearer than expected, so the shares jumped. I wouldn't be just from what I know about the product, I would not be chasing Puma Biotech. Amgen, this is one of the big dogs of biotech. Earnings per share growth is pretty tepid. It does pay a dividend. It's an expensive stock. It's not the kind of stock that I buy. I'm looking for growth stocks that are breaking out. In Trexon, don't know much about the company. Similar to Puma, was doing nothing, had a big move on Friday, a mobile breakout from a squeeze, a kahuna. There's certain things I love about that pattern and things I don't love. So let's quickly look at FinViz and see if there was anything that popped up. I think they've got an immuno-oncology drug in partnership with Pharma, which they do, which had some good news not too long ago. So they're up on their earnings. They have a market cap of $2 billion. I always look at that because in the craziness of takeovers, biotech companies are getting $5 or $6, $8, $10 billion in takeover, depending upon whether they have a marketed product. I think this is one that's a potential takeover candidate, maybe not now. What I like about this pattern, it's basing and it's been in a squeeze. I like the fact that it had a kahuna on Friday because that to me is some conviction on this move. And you had a MOBO breakout. Everything is green. What don't I like? I wish this was actually in an uptrend and the red 200-day moving average was below. That part bothers me and I probably would pass, but keep this on the watch list. Sarepta, much nicer pattern. It's loose, but you notice it pulls back to the 50. Every time it pulls back to the 50, it gets some kahunas and it pops up. Well, pulled back to the 50, had a kahuna pocket pivot, a mobile breakout. So I like, the stocks that I like to buy look a lot like this right here. Pull back to the 50, a mobile breakout from a squeeze, a stock's in an uptrend, the weekly bongo is green, a PSAR reversal, a kahuna off the 50. So this one's run a lot already. This was an 8-point move, and I'm sure it was news driven as well. They make drugs for muscular dystrophy. I think they've been talking about their follow-on products. This is their muscular dystrophy drug. One of the most controversial approvals of a drug in my lifetime. Vertex, this one I liked a lot. It's been going sideways for quite some time. Multiple pocket pivots. Everything is green. Great earnings per share growth. Vertex, look at this on a weekly. This was a time to buy, and if you go back, I was talking about it at $100 a share, and it's now $165, and I think it's poised to go higher. It's probably in the list takeout candidates by Gilead or the like, and it's got a pretty big market cap, though, of $43 billion. Regeneron, this would be a bottom fish, obviously news related, similar to the look of Intrexon. I wish it was in an uptrend, then I'd be all over it. Endocyte, don't know anything about it, a small company. So far, almost every one of these except for Sarepta is in oncology. So the way that I played the biotech, because I have confidentiality and non-disclosures, I do LABU, and LABU reflects the strength of this group, and you can see what it did on Friday. I'm in and out of this position. I'm in it now. And if you think biotech's going down, LAB down, D. And you can see biotech's been in a good place to be long for quite some time. So biotech remains strong, but either have to know something or I kind of do like taking the ETFs. Specialty pharma. Nectar, my God, this thing is on fire. I missed it. I don't think their products are nearly as exciting as the street thinks their products are. But look what this thing did on Friday. Let's talk about what my favorite pattern. What do you have here? You have a stock that's been in a base forever. Okay? It had a mobile breakout from a squeeze, a pocket pivot, and a kahuna coming off the 50-day moving average. That is what I like to buy all day long, all day long. And in this case, I was an idiot, and I passed on it because I thought I know more than the street. And the stock has run from $30 to $100 in 4 months. That is the signal that I look for. If there is a signal for me, if there is a Jeffrey signal, that's it. Zosano doesn't look as exciting. Is there anything else here? That one's the big driver. Is there anything else that was in this that I liked? This one is interesting to me. It's not been an uptrend. It's sideways at best. It had a Bible gap up, high closed doji, a mobile breakout from a squeeze, and a kahuna in the specialty pharma space. I don't know anything about them. I don't know what they do. I buy off of charts. And their chart looks interesting. It's not been an uptrend, which was the caveat. Now, I guess what I could do is say, look at this. It's a great stock, and it's been an uptrend. It just broke above its moving averages. And frankly, that's the way I looked at it. It's just over a longer period of time. It's just, is this the real time that it's going to break out, or is it going to fail? I will go through the list, top 10 semiconductors. It's funny, it was a tough week, but my favorite indexes are up on top, semis and pharma and biotech. Microsemi, Bible gap up on Friday. Not much in the way of earnings per share growth, so it's not my style. Was back here. Kahuna, pocket pivot, mobile breakout from a squeeze. That's what I look for in the market. Micron Technology, I'm long this. Go back to where the thing started. Didn't have any kahunas down here on this run, but it had a mobile breakout and pocket pivots. This has been in a long run, great fundamentals. You're probably getting in late, but I think it still goes higher. Ambarella, talk about an old name. Now, they used to be so linked to GoPro, but they must have had news or earnings come out. I think it was earnings, so more info from the web. FinViz. Earnings, sales beats. I don't like it for the reason of everything else. It's because it's in a downtrend. Microchip, Intel, Broadcom. NVIDIA. NVIDIA is sitting right on its 50. This is one that'll sit on my watch list if I see momentum coming in. Great fundamentals. Maybe it's a good place to be buying NVIDIA again. But just because it's sitting on the 50 doesn't mean it's going up. And it doesn't give you a timing of when it's going up. It could also drop. So I have to see momentum come in for me to get excited. E-commerce discretionary. I don't want to sound like a broken record. Let's put your beady eyes right there. And frankly, it could have been the day before. There was late December. I've already been talking about Netflix and its seasonal earnings trade, which was here. And yes, you're welcome to those of you who made money on it because I kept beating you up to buy it. But this is when I went long Netflix. Mobile breakout, pocket pivot, out of a squeeze. That is my trade over and over and over again. And let's just talk about the anatomy of why this is such a beautiful trade. Let's pretend that this is January 2nd, Tuesday night, and we're looking at Netflix. We know it's in a seasonally strong period. It just hit my screen, actually hit my screen here, 12/28/17, closing right at the 200. Now, I probably was busy, and therefore I didn't take the trade until the second. So let's say you're looking at buying it tomorrow. Here's what I love about this trade. I can set my stop so that I'm going to buy it if it takes out the high of the day. So it would have to close above 201.70. So it's got to be 201.10. I'm going to put my stop probably right below the 50-day moving average. All right, so it's 192. So I'm risking about 5%, a little bit less than 5%. I have a tight stop. I'm only in this stock because it's the 50-day moving average. I've got lots of momentum, and I set my buy stop right above the high of the day that triggered it. So if the stock market rolls over the next day, I don't get filled. If the stock market trades up in an orderly fashion, I'll get filled very quickly, as I did. And this was a great trade. And as I said, this was also a big earnings trade. And congratulations to those of you that actually took the trade. And for those who haven't already been obnoxious to, this is what I got this year from the Netflix trade. I upgraded my boat and got a brand new boat. Last year, just to be extra obnoxious, here's what I bought last year on my Netflix trade. I bought a brand new Aston Martin DB11 last year. So it's a great trade. I don't call out that many specific trades, especially way in advance, but that is the trade of the year, and it's been that way for a long time. Etsy, what a great move this has had. Hate when that happens here. Hold on a second. This is one that we talked a lot about at my meeting in December, and what I had said in my December meeting was that I liked it a lot, but it had to close above this trend line. So this was the buy. So what do we have here? Broken record. Kahuna, pocket pivot, break above the 50-day moving average, a mobile breakout of a squeeze, and throw in a Bible gap up. It's not that hard. I look at lots of charts to find that pattern, and I scan for that in various programs. Had a Bible gap up this week. It's run a long way. Probably getting too pricey for my taste for now. VIPs, I'd like to see it base up here and see some kahunas come in. Chegg, nice uptrend, broke out, a little bit of a flag, and then had a pocket pivot and a big move today. Good earnings per share growth. Don't know anything about it. I suspect it's a Chinese internet play. So if I go more info from Web, I can go down to FinViz and just get an idea of what happened on Friday. I know that Weibo and a bunch of other Chinese stocks did well. Yep, I can't. Something happened. So I'll continue. I'll go down the list. Go back up here, warehouse, and force up, and go back up to the top. Application software. Salesforce had great earnings. Twilio's earnings were great. This is a group that's been strong. And we've been talking about some of them for a while. As you can see, broke out on earnings on Salesforce. It's been an expensive stock for years. Notice how the earnings growth has caught up to the PE. Salesforce, runaway star. Twilio was basically in the penalty box. Earnings came out, Bible gap up, and hasn't looked back. That's a nice move. Workaday, Viva. This is a very strong group with multiple stocks breaking out this past week despite all the toughness in the market. Internet media. Well, this stock has more lovers and haters, Snapchat and Twitter. Everybody used to hate this stock, kind of like Twitter. And you could see after its IPO, it went down to almost nothing. Now you hear all kinds of acquisition talk about Snapchat. And it had a Bible gap up here on news. It's sort of not doing much here. I'm probably not chasing Snapchat. Twitter, another one with some acquisition talk. But I like the pattern now. Step up, sideways move here. Give me a little bit of mobile breakout. And I might be interested, or excuse me, a kahuna. And it might even interest me. Why? I guess earnings aren't out yet, so let me just see. So I guess earnings are coming out Monday. Let's see if I can see anything here. Yep, they're coming out Monday and after market close. A beautiful chart. Kahuna, mobile breakout, sitting on the 50. Hard for me to chase it going into earnings, but it's a beautiful, beautiful chart. And then Weibo, and I'm going to go back. I've done this before. I bought the stock in the 30s. Or actually, forget that. I bought it in the 20s. And it's the same patterns all over again. Look for it to base, mobile breakout from a squeeze, and kahunas. And it's going sideways. It's been squeezing for a while. Kahuna, mobile breakout from a squeeze, and it takes off. I love that pattern. The risk is that sometimes they just base, and even though they get the signals, they don't go anywhere. I put a time stop on those. I just don't hold them forever. So Weibo had some volatility with a bunch of Chinese internet stocks, and it's given us a good buy point again. And its earnings are out. It's going down the list. Infrastructure software. Software has been strong. I actually bought back into CyberArk. Not great fundamentals, but good story. So Splunk, Bible gap up on Friday on earnings. Kahuna, when do you want to buy this stock? All right. Here's a stock that pulled back to the 50, had a kahuna in a squeeze. That would have been a nice buy point. Bible gap up right here with the kahuna. It's what I look for. ServiceNow. Run. Palo Alto. Oracle's got sitting in the 50, but too sideways for my taste. So I would go down through 10. We'll talk a little bit about steel. Or we'll go through the rest. Steel's got the heart of the tariff battle. U.S. Steel had a big move on Thursday, gave some on Friday, but recovered most of their loss. You don't want to be buying it here. You want to be buying it down here, breaking above the moving averages, mobile breakout from a squeeze and a pocket pivot. Look back here. You had your kahuna and a high close doji. It's extended here. High jump near the top. I have a position in it. I actually sold calls not far from the current price because they were expensive calls, and I put the premium in my pocket against my position. AK Steel, don't look that exciting. Nucor, sitting right above the 50. Good earnings per share growth, not this quarter. Steel Dynamics, better earnings per share growth, sitting right above the 50. I think steel's an interesting place right now with the tariffs and the potential wars related to that. Department stores, kind of interesting. Macy's and Kohl's, let's look at them. Big, big moves. So maybe the department stores are not dead after all. So Macy's has broken above its 200, and then on Wednesday had a Bible gap up, continued to move up into week's end. Why might you be interested in Macy's? I doubt they're going out of business anytime soon. They're probably one of the best of the big box retailers. Take a look at them on a weekly basis. Certainly have come down a lot from their highs. Pays a 5% dividend. Is earnings per share growth actually coming back? Will these become growth stocks again? Time will tell. KSS. This one I was scratching my head. It had fantastic earnings come out on Friday. So that would be these earnings were better than expected. It opened up lower and closed higher, almost a belt hold off the 50 with a kahuna and a mobile breakout from a squeeze. That's the pattern I look for, and I took a position in KSS. We're not going to get down to all the retailers, but I can tell you I also took a position in Gap. And Gap's chart, if we ever get to it, here we go. Uptrend, sideways, mobile breakout from a squeeze, pocket pivot, and kahuna. That's also a high close doji on this. And look at the earnings per share coming into Gap. And again, I think these earnings just came out. So I like Gap as well. Lastly, banks. I talked about big interest rates are good for these. KeyCorp is one of the mainstays, and it's at what I think is an interesting buy point. Why? Move up, pull back to the 50, broken record. Kahuna, mobile breakout from a squeeze. Weekly bongo is green. Good earnings per share growth, pays a 2% dividend. This one is interesting to me as well. Now, not everything goes up. The market's going to dictate what happens, but there's no question I want to be in regional banks with interest rates going higher. This looks like a good buy point. Now, to be fair, you could also buy KRE, which is a regional bank ETF, and we've talked about that quite a bit on these webinars. And you notice it's sitting exactly the same. You eliminate single name risk. I think it does pay a dividend, but that's not why I would be buying it for. I'd be buying it for the growth. And then don't forget about the big guys, the JP Morgan sitting on the 50, Bank of America sitting on the 50. Are those not the kinds of times you want to be buying those stocks? Let me answer it for you. Absolutely. I'm long Bank of America. I think I may get longer. So that's my journey to the upside. There weren't a whole lot of groups to the downside. I am positioned bullish. I am a little bit nervous because of the news. I am not by any means all in right now. I'm still maintaining a very high return on the year despite the pullback, and I'd like to protect myself there. So what happens is I usually, if I get up real quickly, I have a bad tendency to get a little bit more conservative. So I maintain my gain for the rest of the year. So I'm perhaps a little bit more defensive than I've been. But there are some stocks that look interesting. So very quickly, here's my buy watch. You could stop it and go look at it yourself. What does a buy watch mean? A buy watch means that I'm going to take those stocks and I'm going to stick them into my trade station. I'm going to go into my radar and I'm going to have them sitting and I'm going to be looking for signals to take these stocks. I'm going to be looking for new flashing high close dojis, new flashing daily signals saying up. I'm going to look for, you can see almost all of them had weekly HCDs, high close dojis, There were a lot this week. And I can go down here, if it's going to let me. And I'm going to look at things like squeezes, pocket pivots, viable gap ups, mobile breakouts from a squeeze. And I'm going to be monitoring those and other indicators intraday. Plus, on several of them, I'm going to put in potential buys. So let's just look at these very quickly, rapid fire, and then I'm going to say goodnight. Many of these we've looked at already, and I hope you start to see pattern. Paycom, this is in the application software. It's a current holding of mine. A beautiful uptrend. Here was the time to get in off the 50. It's extended now. I have a position here. I got to figure out what to do with it. But this is one I would leave on a watch list for a pullback. Vertex, we already talked about. Netflix, we already talked about. Conatus Pharmaceuticals, we already talked about. Again, sort of a sideways pattern. Something different is here. Do your research. It's the pattern I like. It's a cheap stock. Micron Technology, it's late. I don't think it's too late. Chegg, that's one of the Chinese plays we looked at, same stocks. Here is a biotech or a specialty pharma, Neurocrine Biosciences. Don't like the earnings per share growth. It's sort of just becoming a revenue company, which is nice. Beautiful uptrend, and I would be looking at buying it down here because it's sitting right above its 50, which it almost touched on Friday. Mobile breakout from a squeeze, pocket pivot, and a kahuna. Weibo we looked at already, 5 below. Uptrend, sideways, mobile breakout from a squeeze. All I need here is a kahuna. This is one that I might be looking to take a position in, also in the retail. Scripps Network, it didn't, I don't know if this is a takeout candidate because it didn't make my initial screens. So I've got to do some research. I just saw a stock going sideways in a squeeze with a pocket pivot with earnings per share growth. Innovia is a biotech stock, flag, reversal on Friday. It's a high close doji on the daily and I think on the weekly. Skechers, who would think? Run up sideways, sitting on the 50. Give me some momentum. Give me a kahuna. Amazon, this is my number one holding. As I said, I've had this for some time. Sometimes I can't believe the pullbacks I've held it through. It's a position, not a trade, but I trade around it with options. Sitting right on the 17th, had a nice reversal on Friday. It may pull back to the 50, but I bet it gets to 2,000 before too long. Maybe then I'll start thinking about selling some of my position. It's not necessarily for the faint of heart because it's had some, and I've talked about before, these are not small pullbacks. It's just conviction, but there's things you can do. If I want to, I can sell calls that are out of the money. That means I have a little bit of a cushion. If it pulls back 30, 40 bucks, and I've got calls that generated $100 a premium, and that are still way out of the money, that reduces some of the pullback. I could sell a call and buy a put at the money, so I have no risk to the downside. The risk I have is that the stock goes up and I have to either buy back the call at a higher price or let the stock get called away at a higher price. I love Amazon. I love the service. It's going higher. NVIDIA, we talked about. Look for some momentum coming in. Chemet, this is the danger of pullbacks to major moving averages, is sometimes they just don't do anything. This is 4 months. I leave it to watch. And it looked like it broke out here in January, and it came right back with the correction. It's got good earnings per share growth and some demand. Virtue. Who benefits from high volume and volatility trading? Virtue Financial does. Great earnings per share growth, pays a nice dividend. Yes, it's too late. It broke out. Oh, imagine that. Kahuna, mobile breakup from a squeeze and a Bible gap up. It hasn't looked back. I look at the PE. I look at the growth rate. I'm going to look hard at Virtue Financial. I don't think it's too far gone. Regeneron is a quality asset that's pulled back substantially. I'm not a bottom fisher, but I'm going to watch it. United Rentals, uptrend, pull back to the 50. All it's missing is a kahuna. It did have a PSA reversal to the downside with that red dot there. So I probably would want to see it trade up, probably above these highs before I'd be interested in chasing it, which means I'm going to give up something to get there. But I think United Rental is a great long-term play, great earnings per share growth. Easy Core, pawn shop retailers, it's just the pattern. Sitting right above the 50 with a pocket pivot, kahuna, mobile breakout from a squeeze. Good earnings per share growth. Coals we talked about already. Westlake Chemical. I wanted to show you this for a couple of reasons. Here's where it broke out. Above the moving averages. PSI reversal the next day. Mobile breakout from a squeeze. And a kahuna. That was at $60-some. It doubled essentially in 6 months. What's it doing right now? It's sitting on the 50. It's in a squeeze. And it goes on my watch list. And I might even go into my Warden or one of my other programs and say, if it trades above that prior high, make me look at the stock and see if there's momentum and I want to buy it. Horizon Pharma, an old name to me, different, used to be, it's still HCNP. 3 kahunas in 5 days means something. A break above the 50 in a squeeze after mobile breakout. I'll do my research, but that looks interesting to me. We talked about the gap. High Crush Partners is one of the sand companies. There's a problem with sand supplies. If there's problems with supplies, that's good for me if I own a company that sells the sand. Huge dividend, demand coming in, great earnings per share growth. If oil prices stay high and frackers stay fracking, this thing's going popping. Sitting on the 50, mobile breakout from a squeeze and a kahuna. It's not that hard. Urban Outfitters, up, sideways, looking for some momentum. We talked about KeyCore. I don't really like this. It came up on some of my person scans. It's below the 50. It is basing here. It did have a kahuna, so I put it on a watch list. We talked about Ambarella, kind of a bottom. This was, let's see. And then Blackstone is the other one to point out. It's sitting on the 200, not in an uptrend, doesn't have a kahuna. It's been a good place to buy in the past. It pays a 10% dividend. It is a real company. I've owned it on and off for a long time. I think I may be getting it again. It's a huge dividend yield. Now, it is perhaps a bond surrogate, and perhaps it's one of those stocks that may have problems if rates go high. I like the dividend, and it's something that might be worth putting on a watch list as well. And then look at this reversal day here. Last time it did this, the market went higher. It went higher. Not necessarily a growth story, but I like the dividend. Here's a refiner. Refiners seem to be firming up. A kahuna and a mobile breakout in a squeeze. 3.9% dividend, great earnings per share growth. I wish it was above the 50. Bank of America, I already pointed out. Here's another oil gas production breaking above the 200. This is really let the buyer beware. It's just because I have it here doesn't mean I'm going to buy it. And the reason why I say it's been in a downtrend forever. Forever. So there's no reason to think it's different this time. I can watch, and if it is different this time, if it can break above this 200, hold, and go higher, this might be an interesting play with those earnings per share growth. And then if I had to pick a stock of the day, this might have been the stock of the day. Hilton Grand Vacations. Why do I like this? uptrend, pull back to the 50, and let me sound like a broken record. I have a kahuna. I have a pocket pivot. I have a mobile breakup from the squeeze. My weekly bongo is green. I've got earnings per share growth higher than the multiple, and trades over 500,000 shares a day, which is enough for me. I think the stock is going higher, and I could put my stop. Boy, this is a great one because if I buy it, say at 45, I can put my stop probably the low of this day, 42.58. So I'm risking 5% on this. I think this is a lovely chart, and it's my perfect setups. And then just to point out, Pulte and I'll show you Toll Brothers too. They are sitting at interesting buy points. They're out of favor right now. I'm not telling you to chase them, but put them on a watch list because they're sitting right down on their 200-day moving average, and they undercut it back here. But it's a quality property, good earnings per share growth, much smaller multiple, small dividend yield. And then see the other one. And then here's Toll Brothers, same story. So, giving you some ideas. The most important thing is what the news flow going to be overnight on Sunday. Will we hear rhetoric from the EU about a horrible trade war? And if that's the case, I don't want to be close to the market, and I'll probably lighten up. On the other hand, my guess is it's just going to be that rhetoric, and I think there's a few things there that look interesting. So on that note, thank you for watching, as always. If you're interested in coming to a live one-day session, and I assure you it'll be the most value you'll ever get for $500. You'll get things to take home. You'll get indicator sets, and you'll get some food and lots of my time before and after. I'd love to have you, but I need an email, hgsidoc@gmail.com, demonstrating interest. On that note, I'm going to say good night. Good night, everybody.